Hello, hello, morning trader, morning. Buenos días, Agneman, Kale, morning, Rio, Bish. Okay, it's the same ideas, monthly distributions for DXY. So DXY is moving to the previous monthly high or the 3.5 and 4 deviations. So this month, this is the last week for this month. So it's important for the monthly power of 3 reach the maximum expansion in these projections in this month, in month March. The range projections in the manipulation phase or in the week, it's in the 3.5 and 4 deviation. Because in 2.5 price retracements to discount, again return above the 2.5 with body the candle, printed one displacement again in the 2.5. Look here, this BC. So the next target is the 3.5 and 4 deviations. In Nasdaq, continue in bearish. Opposite DXY. For the moment, patterns in index futures, this expansion is very fast. So for the moment, the expansion is printed, waiting for the next fractals. This power of 3, daily power of 3 in Nasdaq, open and moving to the previous week. Remember, the more underrated PDRA, it's the weeks. But inside the weeks, you can find lower time frames, internal liquidity, order blocks, fair value gaps, and internal liquidity. Nasdaq returned to the weekly open here. Look this reaction. Yesterday, I say the high probability fair value gap. This high probability fair value gap is one time opening plus one fair value gap. But this high probability is for any PDRA. So, for example, here, one high probability order block for reactions, it's the same. Time opening, one order block. Look in photo here. This is the order block. This is the weekly open. So this is one high probability order block. Why? Why is high probability? Why? Okay. You've put attention in the weekly power of 3. think about the cycles inside every power of 3. Accumulation, the next, manipulation, the next, distributions. Okay, so the important thing here for the high probability is in the distributions here. So when price is in distributions, you already have the information for the manipulation. So if price here already have printed this week high, this is the opening here, this is the accumulation here, the bullish move, it's the manipulation for printed this week high. So when price change from manipulation to distributions, price moving below the weekly open, the opening for this power of 3. This is the opening here. So in your mind, when price is below the time opening, you think in distributions. Okay, in distributions. So if price is in the distributions in bearish move, when price return one PDRA in the weekly open, this is high probability because price is in development for this body the candle. So if you have in this area the order block PDRA in the weekly open, price already printed this week high. This is high probability PDRA because you are working in this power of 3. So if you are working in this power of 3, you're looking for the body the candle in development. So price return with the weekly open in this order block and reactions, immediately reactions, because it's in distributions. It's so fast, these moves. But the reason is this power of 3. Today is Wednesday. It's the 3 days for this week. Monday, Tuesday, and Wednesday. So in Tuesday, typically the high of the week is printed. So in Wednesday, it's one continuation. So Tuesday, high of the week. Wednesday, retracement to premium in the weekly open, PDRA, order block for all, and reactions for printed this body the candle or this distribution. This is the reason the one high probability PDRA. Opening and PDRA. It's no only fair value gap. It's every PDRA in the opening with this narrative. Identify your power of 3, your present power of 3 in development, and anticipate the distributions or the change from manipulation to distributions. Projections for this fractal in 4O in the weekly open. This low and this high. Look, the Tuesday range here, the high of the day for yesterday, projections, this high, this low. Remember, every single power of three have energy limited energy. So these deviations, it's for identify this energy or maximum expansion. Yesterday, in the 4 p.m., exactly in 4 p.m., price reached at 2.5 deviations here. So 2.5 deviations is for one a smart money reversal or one retracement or redistribution or accumulation. Here 2.5 deviations, price, retracements to premium from this range, this high and this low. So the next day, in other words, the present day, price working in the previous range for yesterday. You need projections, this low, this high. Here, you can take this or the order block, the more recent order block here. Look, the previous candle here, it's the more clear. So price moving to premium, the order block 4.0. But if you need more precision, you need lower time frames. Find other PDRA inside this range. So in this time frame, in the 2.5 deviations here, you can find this internal liquidity open. Remember, this is the previous daily wick. These candles here, it's the daily's power of threes here. So the previous week here, this candle, this is with midnight open. But look here, please, attention. In the mid for this week, remember, inside this week, in lower time frames, you find internal liquidity. And what is the internal liquidity in this week? This fair value gap here in the 2.5 deviations plus weekly open and equities open. High probability fair value gap, weekly open, fair value gap, open here. The equities open price immediately expansions because already it's in premium and in one high time frame PDRA in the previous week, the order block 4.0 in the weekly open and plus one SMT here with a SPUS. This high in SPUS, it's taken here and Nasdaq don't take in this high. This is your confirmation in the PDRA higher time frame, in the time opening, in premium market. 170, it's the confirmation. And you already have one bias in higher time frame. If the XY is bullish, very bullish in monthly distributions, you will expect SMT in the highs in the opposite markets. This is index futures. It's opposite the XY. Okay, so right now, I don't find one next move. I need waiting for the next retracement or fractal because price expansion very fast. So these projections or this the last bullish move, this fair value gap price already reached the 2 and 2.5 deviations here. So its probability continue or one retracement here, but I don't know. It's in 2 and 2.5 deviations and taking one external liquidity, the Monday's low here. CB 10 a.m. What is the opening 10 a.m.? It's here. Yeah, the order block it's for your standard deviations projections because in the standard deviations you use the manipulation leg or manipulation phase. So one order block it's one manipulation because for validation one order block it's important taking one previous low. The next candle close above this order block, but the previous candle, the order block, taken the previous low here or one liquidity pool or sell side liquidity here. So this move it's one manipulation here, it's the last bearish move before one bullish move. So this candle, it's the same from one manipulation leg or manipulation phase, and you can use the order block for projections. These projections, it's when you don't have one discernible range with swing high. For example, here in 5 minutes, it's discernible here. But in this time frame, you are looking this time frame, for example, for projections here, you don't find one swing high for the manipulation, only for the distribution, the first distribution. But for manipulation leg, the more recent, it's here, this swing high here, and this swing low. It's no sense for this price action because you don't really expect bullish moves in this market in this moment. So in this case, specific in this case, the better standard deviation projections, it's the last bearish candle. In other words, the order block here. This candle taking the previous low here. The next candle close with body the candle above the previous body the candle here. So in 5 minutes, you can find one discernible range inside this order block. Look. This high and this low. So if you take one order block from projections in your standard deviations, in lower time frames, it's one manipulation leg with one swing high and one swing low. Swing high, swing low. It's more clear here, yes, but in your mind, it's the same here, this, in this time frame. This is fractal. 5 minutes. Price taken, this sell side liquidity. Manipulation. Here. Projections, this high and this low. Price ratchet, the two deviations, 2 and 2.5 deviations inside the fair value gap. Boom. This is no ambiguous. Algunos me dicen, es que estás inventando porque tomas un order block y luego tomas un swing high, tomas un swing low. Pero no, lo que pasa es de que en lower time frames puedes encontrar los rangos más discernibles, pero en higher time frames puedes tomar lo mismo con solo una vela. In one single candle you can find this standard deviations range. Okay, two deviations and 2.5 deviations here. If price is looking one premium, retracement, inefficiencies above the equilibrium, here. Minutes. DXY with this buy side liquidity, fair value gap here. Patterns. The 3.5 and 4 day deviations, it's in the monthly open. I need one coffee. Wait a minute, please. Hello, hello. Okay, one question, one question. This IM session, the 10 AM, it's high probability or low probability, and why? Why? Why, Fabian? Exactly. When price already have the expansion, this is more probability for one consolidation or one retracement, but more slowly because the fasting moves already it's printed. Its probability price continuing expansion, yes, but it's low probability. It's more probability one consolidation. Exactly, Voodoo. So price need one rest, and this rest is one little consolidation for continue in the next expansion move or one retracement. For example, if price here don't move, only consolidation, and not one retracement, it's probability the next move continue in the same direction. But need time. This price need time for this rest, for the next move. So patents. 1 minute. Look, in 1 minute. For the moment, price in this session, it's no expansion in 10 a.m. Specific in the window for 10 a.m. Here, price immediately continuations because this candle here, open in 1.5 deviation here. So open and immediately continuations to the 2.5 deviations here. In this point, 2.5 deviations, price need one rest. And price retracement, consolidation. In 2.5 deviations. And 2.5 deviations is for one retracement or one reversal. So patience. DXY dipping in this fair value gap in bearish move. No se ve. A ver. Bueno, nos quedan como 46 minutos. ¿Qué les parece si vemos un video de ICT? Study ICT in this market. Ok, voy a seleccionar uno, Algorithmic Theory.